Hey guys, Kevin here. Today I'm going to show you just a simple strategy that you can apply to supplement your trading. This requires having the 9 EMA and the 21 EMA, as well as the stochastics. Okay, now just to go over what EMAs or stochastics do, right? So if you have the EMA on, it's the exponential moving average. Now you might be asking, hey, why do you use the EMA as opposed to the SMA, right? That's a good question. Because the EMA reacts faster to the price than the SMA. Okay, now knowing that all these indicators are all lagging indicators, right? I would rather have the ones that react to the price, okay, faster, right? Now, you might ask, why do I use stochastics slow and not stochastics fast? Okay, now let's put on the stochastics fast to compare. I have this fast on. What it does is, if I'm going to use this indicator to help me kind of, figure out when to kind of buy or sell, right? This is way, way, way more trickier to use than the stochastic slow, because the slow is smoother than the fast. Now, if I'm just using the fast, what it's gonna do is it's gonna make me get faked out of trades even more, right? Even more than having the slow on. So just in general, having the fast on is just gonna make me a little more uncomfortable. Okay, that's why I like using the slow better. Now in this strategy, it doesn't matter what time frame you're using it for. I would rather have it on a 1 hour or 4 hour, maybe even daily, right? I use this predominantly for swing trades sometimes. Um, I use a lot of different other strategies, but it just depends on what kind of approach I want to take. If I want to be more aggressive, or if I want to kind of hold this and not use a lot down. Not you know if I don't, for example, if I wanna buy debit spreads, right? I'll use a different strategy I use a different approach of looking at the charts, right? Or if I want to, for example, do strangles and straddles, right? I would have different indicators on to kind of tell me whether it's a profitable trade to take or not, risk to reward wise, right? Now, this strategy I use just to look for swings for about 2-3 days, right? 1, 2, or 3 days. So if I'm using the strategy, I want to wait for the stochastics slow to cross first before the EMA does. Okay, if you didn't know, what stochastics do is they determine the momentum. Okay, so when this crosses up, this generally tells you that the buying momentum is increasing, right? You have this top blue line here, the 80, and you have the bottom blue line here, which is 20. Right now, a lot of people think that you have these lines, and just because it goes above 80, it means that it's overbought, or it goes below 20, it's oversold. But they fail to realize that stochastics it was made to showcase momentum, not overbought or oversold levels, right? Because if you want to look at overbought, oversold, all you have to do is put the RSI on, right? That's the stochastics. It's not meant for that. It's meant to showcase momentum, right? So this first cross tells me that the buying momentum is now increasing. Okay. Now the 9 and 21 cross, right, agrees with that. Okay. Obviously, right, the indicator doesn't uh move the price. The price will reflect what the indicator tells you, if that makes sense, right? You don't want to just get into it just because you see this crossing, right? There's got to be, you have to consider risk to reward. You have to consider what market we're in. You have to consider a lot of different factors before you just jump the gun on trades, especially swings, right? Because there's a lot of uncertainty in the air. There's a lot of uncertainty in general. Just that when you swing stuff, you're more likely to be a little anxious because you don't know what's going to happen overnight or in 2-3 days. But the good thing about swings is that you have time, right? You have time. So if you think that for example, Home Depot here is going to go from 180 183 all the way up to 200 in a week, right? Then what you can do is you can just buy an expiration that's about, a month out or a month and a half, so you have that time. So when the longer, the more out you go, the less anxious you'll be, because you know that time is on your side. Okay. Now, for this strategy, right, obviously you wait for the stochastic slow to cross first, and then you wait for the EMAs to cross. And once the EMAs cross is when you get that buy signal, right? Another thing to kind of help whether you should get in or not is to look at the volume. How is the volume doing at the cross, right? How is the volume reacting? How is the volume that day? Or that's if you're looking at 4 hour chart, how is the volume during that 4 hour, right, when it created that candle? Okay. Now, other than looking at volume, you can also look at a break of past resistance, right? In this case, we broke the pre-market high here, right? So once you have that break, right, you know that buyers are stepping in now, and you see that in the stochastics, a lot of momentum was getting built up even before that, right? A lot of buying momentum, and then now you have this cross, and you have volume, and you have the break. All that's left for you to do is execute, right? Obviously, you have to back test your strategies first to see if they even work, right? Like, I'm showing you guys this because I know this works, right? I know this strategy works. So whenever you find new strategies that you want to apply to your trading, you have to first see if it works. What you can do is you can go to the on-demand feature of Thinkorswim, right? And you can go back, for example, if I click this, right, you can go back however many days you want. You can go back months, even years. Look, I'm going back to January 2017 on Friday at 9:39, right? All I got to do is just press go, and it'll show me what happened that day. I can literally trade this. I can trade that day as if, it's happening now, right? This is how you practice strategies and figure out whether they work or not. Okay, that's how you do it. So make sure, right, whenever you find new strategies, you back test them multiple times on multiple frames, do multi-frame analysis, the whole works, right? Just make sure you put the time and effort to learn this, because once you apply it with your real money, now, for example, if you want to go trade your new strategy tomorrow, right? What you can do is you can just sit here for the next 3, 4, 5 hours and test out multiple different occasions, right? You can go back to December 2018, November 2016, 2015. You can check to see if your strategies work on different market conditions, right? They're in different market cycles, right? So yeah, that's that for today. I'm going to be uploading a lot more content on YouTube now. All these strategies that I give you guys, like, you know, people will charge for them, but it's not. These are strategies you find on the internet. A lot of people are just too fucking lazy to look these things up, right? Excuse my French, but just make sure you put the time in if you want to learn how to do these things, because it's important, right? Invest in yourself, right? It doesn't necessarily have to be money that you invest in yourself, but just invest the time, right? Invest the time to educate yourself, so you know more now. Okay, you guys have a good rest of your day. Appreciate you guys listening to me.